report. We have the markets closed today, and we're going to go over those. But remember, guys, when you come on, this is participation. I don't do these videos just to sit here and talk to myself. I need you guys asking questions, and that's what we do this for. Guys, I've been in the mortgage business for over 30 years. I know this business. So if you have any questions when it comes to buying your first house, maybe investment properties, what kind of loan programs there are, if you're self-employed or anything else, love to answer those for you. But we had in the news today, we had the CPI, which is the Consumer Price Index, showing us the inflation numbers at the consumer level. And they actually came in really good. Well, I won't say really good, but they came in good. And this morning when the markets opened, it was good news. And we had good news throughout the whole day when it comes to stocks, bonds, actually mortgage rates came down, cryptocurrencies stabilized, and everything else. So without further ado, guys, remember I asked you, if you're coming to the channel today, please be ready to ask some questions, because that's why we do the live events. So if you would, when you come in, let me know where you're coming from, maybe what you do for a living. I'd love to know those things. So without further ado, let's get over to the Consumer Price Index. It's an exciting day here, guys. Well, let's go over to see what's going on in the markets. And again, guys, ask questions. As we're going through this, I'll stop my broadcast and answer any questions that you guys have. So right now we see the bond market, really no changes here. Bond 10-year Treasury yields basically nothing. They're down 0.202, nothing there. We have the MBSs that are up 6. This was skyrocketing just not too long ago. Let's go to the 1 day. Look at the 1 day. Look at this. Remember, when this goes down, mortgage rates go up. So we kind of came through the day and it kind of plummeted through here. Don't know why. And then it just spiked from there. So we got a couple of reprieves today on mortgage rates. So they start coming back down. The good news for the day was, well, we got the FOMC. That's when you start seeing things like the FOMC. What that is basically the Federal Reserve. Okay, so it's a long name for that, but just think of that. That's the Federal Reserve talking. So here's the minutes. They come out after they have their meetings each month. They come out with the minutes. So I didn't really go down through this. I'll put this link down below so you guys can read it. But this is some of the things you get from the newsletter. If you sign up for my newsletter down below, you'll get things like this. So let's break it down real quick. I won't bore you to death on this, but let's just break it down real quick. Fed minutes. Participants agree action taken by the Fed and others had helped calm banking sector conditions. So one of the things they're saying is why they did what they did the last meeting is because they needed to calm the banking sectors. Remember, that was at the time when a lot of these banks were going under for insolvencies. And so I still think there's something there. And hopefully we find out exactly what's going on. Federal minutes participated commented that recent pre-meeting data indicates slower than expected progression on disinflation. So they're saying, okay, maybe the inflation isn't coming down as much. They agreed to disinflation for core services, consider whether it would be appropriate to leave rates unchanged. Several participants noted they consider whether it be. So let's just pass that. It's old news right now. What I want to show you guys is, let's really dive into the inflation numbers. Let's see where these numbers might deviate from what I'm showing you. So here's the link, and they post this. It was just posted today. You can see that right through here. So it's current data, and it goes through and breaks it all down. And again, I'll put this link down below because I need you guys to educate yourself. But you're going to go through here, and here's all the breakdowns of the differences from where we were month over month in the last previous, 6 months? 1, 2, 3, 4, 5, 6, 7 months. Okay, so you can see here's the deviations. Here's the differences. So we see fuel plummeting, gasoline plummeting. What's going up? Well, food away from home. So food, everybody eating out, I'm doing the same thing, isn't helping the matters. But here's the biggest thing, and I'm going to show you, this is why you really need to focus in on and concentrate on what people are actually saying to you, trying to explain to you, and reveal to you, other than listen to what you kind of want to hear. So please don't get offended by that. Please listen to some of the data that we have. And how the no matter what source you go to might be a little bit different. So that's why I'm trying to fact check this and teach you guys how to fact check. So we have here shelter. What has shelter done over the last 6 to 7 months? Well, in what month is this? September. Shelter was up 0.7 from the previous month. Then it went another 0.7. Then 0.6. These are all up. So if every month goes up, let's say 0.7, you multiply that by 12, that's a huge move. So what they're saying is right now we're seeing an 8.2% right here adjustment in the last 12 months from March of 2022 to March of 2023, 8.2. You see it right here. This is the Federal Reserve's numbers. Okay, there it is. Bureau of Labor Statistics. Okay, so let's go over to some other areas and just look at this. Here's the numbers that they're getting. Okay, you can see that spiking out the roof. And if you look at this numbers, you're probably thinking, holy crap, this is nuts. Well, let's really dive into some of these numbers. Now, you go to Market Watch, and the reason why I pulled up Market Watch is they had this big caption about CPI and housing and all that stuff right here. Calming inflation means lower mortgage rates eventually. So let's go down. And they had a great article in here about the housing and how much housing prices are going up. Private data sources, such as apartment listers, shows that the rent index is only up 2.6 year over year versus the federal government's estimate of 8.8. Huge note there. Okay, the next thing is this is apartmentlisters.com. Okay, this is a different actually website, believe it or not. Overview. Welcome to the April 2023 apartment listings national rent reports. Our national rent index increased by 50 base 0.5. Okay, but you want to see down here, year over year rent growth is continuing to decelerate and now stands at 2.6%. Okay, here's what the Federal Reserve is looking at. 2.6% is what everybody's saying it is. They're saying it's 8.2. You make that alone, that change in the CPI index, you come up with an inflation rate at 2.6%. The federal government's goal is 2%. So we're getting there faster than you think. And when the federal government, when they start seeing these numbers, their lagging indicators roll over, they're going to say, whoa. And that's when I think, and everybody else thinks, they're going to overdo it. And that's what's going to happen. That's going to cause the recession. And then what happens in most recessions, mortgage rates start coming back down. So without further ado, let's get over to some of the economic calendar events that we had today. And I'll bring up the speed on that. Every time I get out of this darn thing resets. So let's go back and reset it. So if you guys want to check out the economic calendars, just go to Bloomberg.com. You're going to go to the economic calendar. You're going to go down through here and you want to filter. You want to clean all that up. You just want America, United States. Go through here and select all for all the categories. And you want only the most important because you're going to get just a bunch of junk in there if you don't do it that way. So we're going to see right through here, CPI numbers. They're down from where they were. And then we got oil inventory, which is up more than expected. So hopefully this will start curing some of these numbers as well. You see in the fuel department, they are down and they continue to go down, down, and down. And here's another piece of what the oil markets are doing right now. So you can see it over here, but we're up a little bit. If you go to a 1 week trade, you can see that it's kind of way up there. But if we go over where we were last year at this time, you can see we're right in it peaked out at about $120 a barrel and we're now trading at 83. So it is down from where we were back in those days. Let's see what else I have for you on here. The federal funds rate. Did any of this news change what the projection is on the Chicago Mercantile Exchange? Is the Federal Reserve still going to increase rates at the next meeting? Well, let's look at it. Here's your federal funds rate. It's ranging right now at 4.75 to 5. This is where it is. Let's go to the Chicago Mercantile Exchange and see what the futures markets are telling us. And they're telling us that it's going to be at 5 to 5.25. Okay, so is it 4.75 to 5? 5 to 5.25. That means there's a 60, almost 70% chance that in the May meeting, Federal Reserve is going to raise rates one more time. And then they expect to hold it steady in June, or if they don't raise in May, they're going to raise in June. And then from there, that's when all the wheels start to fall off. Okay, so let's check out the other markets. What's Yahoo Finance have to do for us today? Let's see how the markets close. Let's get out of that. And the Dow Jones was up. It was up about 100 so points just recently, and now it came tumbling down, and I don't know why. That took a huge move, and then also mortgage rates did as well. Fed officials mauled pause as staff core forecast recession. So you're going to hear a bunch of news now. People are going to dissect all this data and then figure out what's going on. Let's get over and see what happened in the mortgage-backed securities market. Let's refresh this for one last time of the day. The MBS market ended up 19, which is great. Because why? When this number goes up, the price of a bond, it means rates are coming down. Okay, so let's see where rates are. They're down about 10 basis points across the board. So that means, basically if you're not locked in, you might get a little reprieve on rates, but maybe not. You got to remember this, guys, this is a moving target. So you got to depend, if you locked in a week ago, you can't say, okay, now it's down, 10 basis points. Can I relock? What's my lock at? And so forth. You can't change. Try not to chase that because you're basically trying to chase the bottom like you're doing on stocks and things like that. So without further ado, guys, please join me. Ask any questions. I hope you guys can ask questions because I see everybody here, but but I don't see any questions popping. So if you guys can, if somebody could just pop in and say hi, thanks, give me a thumbs up, let me know where you're calling from or whatever. At least I know the chat's working, because right now, if you want to see what I'm seeing, there is nothing. There's nobody asking any questions. And again, guys, that's why we're here. So sometimes, unfortunately or fortunately, I can't see any of your chats, but let's see. Test. Yep, that seems to be working. So if you guys are out there and you have any questions for me, please let me know. I know we have a limited audience today because spring break is in full force, and we have realtors and borrowers and lenders. Everybody's on spring break this week. I took mine last week. So if you have nothing else, without further ado, I'll give you guys another minute or two to come in and give me a chat or do whatever. I'm also going to go to my screen. Let's go over to my YouTube channel, and I just want to make sure that you guys can give me the chats. And if you can't, I'll be more than happy to answer those on a side channel. So let's see what we're looking like right now on the YouTube front. Let's go into here and let's see how we're doing. Might get a okay. So let's see. Nope, there is nobody chatting. So that is, if you guys got nothing else, I'll leave you for the day. So thank you so much for joining me today. If you're in need of a mortgage, or you want to kick the can and see how much do you qualify, you're self-employed, we just got somebody approved with a stated income loan. Believe it or not, stated income. They had to have money in the game, and they had to have some reserves, actually a lot of reserves, but they were able to get done. So we're doing 1099 income, stated income, bank statement loans, what you call debt service coverage ratio. So if you're an investor out there and you need some of these products, I highly suggest you reach out to us for assistance. If you're a first-time home buyer and you just need to kick the tires, hey, how much money do I need to buy a house? What does my income qualify me for? Is my credit score high enough? Any of those things, if you have a question about that and more, please reach out to us. There is a link down below where you can schedule an appointment. And other than that, I will greatly appreciate you watching. Thank you so much. And I will see you tomorrow. Don't forget to subscribe down below. Check the bell so every time I post a video,